All right, let's get right into it. Today, we're going on a hunt for what could be the next massive winners in the stock market. We're going to look past all the noise to find 5 companies that have some serious upside as we look out towards 2026. Let's do this.
There's this classic trap that so many investors fall into. We all see a stock go to the moon, and then everyone piles in right at the top. And that's exactly what this quote gets at. By the time a stock is the talk of the town, that's usually where returns go to die. It's the classic winner's curse.
And this slide right here, wow, it just says it all, doesn't it? I mean, just look at these numbers. Palantir up over 1,600%, NVIDIA over 1,200% since they really broke into the mainstream. That's incredible, but those gains are in the rearview mirror. The real question, the one we need to be asking, isn't what did great last year? It's what has the potential to win in 2026.
So that's our mission today. We are going to look beyond that obvious, flashy hype. We're searching for 5 companies that are in a fantastic position to grow, but haven't had that NVIDIA moment just yet. We're looking for tomorrow's winners, not just celebrating yesterday's heroes.
Okay, before we dive into the names, just a couple of quick ground rules so we're all on the same page. First off, this list is not in any particular order, and the whole focus here is on 2026 potential. Also, these are real, established companies with strong fundamentals. We're not talking about some sketchy penny stocks. And the key thing is, while they've done well, they haven't had that crazy vertical explosion in their stock price, at least not yet.
So, our first category of stocks is all about building the actual backbone of the whole AI revolution. See, instead of chasing the latest shiny AI app, we're going to focus on the companies providing the essential gear that makes it all work in the first place.
This whole strategy is called a picks and shovels play. Just think about the gold rush, right? You could take a huge gamble and try to find gold yourself, or you could be the one selling the picks, the shovels, and the pans to every single person heading west. It's a bet on the growth of the entire industry, not just one lucky prospector.
And our first company, Vertiv, is a perfect example of this. See, as we build more and more powerful AI data centers, the 2 biggest problems you run into are power and cooling. These things get incredibly hot. Vertiv is a leader in a technology called immersive cooling, which is absolutely critical to keep these data centers from melting down. They are smack dab in the middle of a huge bottleneck.
Now, right now, Vertiv is doing about $9 billion a year in revenue. And hey, that's already a very solid business, but that's just where they are today. What's really exciting is where this entire market is going.
By 2030, the total market for all this data center gear is expected to be around $80 billion. That is just a massive runway for growth. And since Vertiv is basically the gold standard here, they are perfectly positioned to grab a huge piece of that pie.
All right, next up in our picks and shovels category is Arista Networks. They're another infrastructure giant. So if Vertiv is handling the air conditioning for the AI revolution, you can think of Arista as building the digital superhighways. They absolutely dominate the market for the high-speed networking switches and routers that go inside data centers. You literally can't have an AI data center without their gear.
Now let's look at the numbers, because this is what makes these companies so compelling. Check this out. Over the last 2 years, Vertiv grew its revenue by 80% and its free cash flow by a staggering 440%. And Arista? Even crazier. Revenue up 115%, free cash flow up over 500%, and get this, they have 0 debt. These aren't just good stories, they are financial powerhouses.
Okay, so for our next theme, we're going to pivot a little. We've built the infrastructure, now we have to protect it. As everything moves to the cloud and AI gets into everything, cybersecurity becomes absolutely mission critical. So let's meet the digital guardians.
Our next 3 companies basically form a team, a full security and operations stack. You've got CrowdStrike, which is your first line of defense, protecting things like laptops and servers. Then there's Zscaler, which is like the modern firewall for the internet, securing access to the cloud. And then you have Datadog, which is kind of like the lookout on the watchtower, monitoring everything to make sure all the apps are running like they should.
So how big is this opportunity? Well, right now, if you combine the revenue of those 3 companies, it's about $12 billion. But by 2030, the total market they can go after is projected to be almost $250 billion. That's a potential 20x expansion from where they are today. It's immense.
And just like our first 2 picks, the fundamentals here are absolutely stellar. All 3 have more than doubled their revenue in just the past 3 years. They're all still growing at over 20% a year. They're spitting out tons of free cash flow, and they are all leaders in their own spaces. These are high-quality, dominant businesses, period.
Now, to really understand what makes a great investment, I think it's just as important to understand what to avoid. So let's flip the script for a minute and look at a little cautionary tale. 3 stocks that are getting a ton of hype online, but, well, they lack the fundamental strength we've just been talking about.
Let's talk about 3 names you might see trending: EOS, BBAI, and Wolf. They all have these really compelling stories that get a lot of attention. But when you lift up the hood and look at the engine, a very different picture starts to emerge. They all share some common and pretty serious red flags. Let's break them down.
Okay, red flag number 1, extremely high short interest. For all 3 of these, it's sitting around 30%. What that means is that a huge chunk of the market, usually the really sophisticated investors, are placing big bets that the stock price is actually going to go down. That's a major warning sign.
Red flag number 2 is just the staggering amount of cash these companies are burning. I mean, we're talking about annual losses ranging from $250 million to almost $700 million. That is just not a sustainable way to run a business.
And finally, red flag number 3, massive shareholder dilution. To pay for all those losses, they have to keep issuing new shares of stock. The number of shares for these companies has exploded by over 250% in just a couple of years, which means every share that you own becomes worth less and less over time.
So, after comparing these 2 very different groups, the fundamental powerhouses and the overhyped cash-burning trio, what's the key lesson here? What's the big takeaway for us as investors? Well, it really boils down to a pretty clear and actionable strategy. Here it is in 3 simple steps. First, you have got to learn to look past the social media hype and the exciting stories. Second, you have to do the work and scrutinize the fundamentals. You got to look at revenue growth, free cash flow, debt. And third, try to find the bottleneck. Find those picks and shovels companies that are essential for an entire industry to grow.
And this quote just sums it all up perfectly. Investing is all about looking forward. What happened in the past is history. The whole goal is to position yourself for the future. And this analysis gives us a really powerful way to think about how to win in 2026.
And that brings us to our final thought for today. The principles we talked about, finding the bottlenecks, focusing on fundamentals, you can apply them to any industry. So I'll just leave you with this question. Beyond things like cooling and cybersecurity, which critical bottlenecks are you watching for the next big wave? Thanks for tuning in.